Dow Jones, SP500, and Nasdaq are still giving us that little warning sign. I'm going to be covering that today. Also, I'm going to give you a quick little update on silver and gold as well too, and a whole bunch of other down home country goodness. Let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so let's get straight into today's video. But if you guys enjoy these analysis videos, hit the subscribe button. Would you hit it? Click bell buttons and everything. Click buttons and click that little thumb up. You know that thumb up? Click thumbs up and give me one of those thumbs in the chat box below, and put the word stock market amazing in the comment section below if you like these videos. That'd be awesome. Now let's get straight into Dow Jones. Dow Jones is still creating that little warning sign, and these little warning signs come around and not many people notice this. Many people are focusing on all the other BS out there, which is, oh, let me have a look at the stochastics. Or let me look at the RSI, you know, because that's the RSI, right? One thing you'll realize in the free trading course I'm giving away, that's right, I'm giving away for free. It's my brand new trading course, the breakthrough trading course. Is like 7 or 8 videos there, from the foundations to chart reading techniques to trading systems, so much more at johnsfreegift.com. You will see in that free course, and also the very first thing in the description, you'll see that I teach you how to read the chart itself. Why? Because the market is the thing we trade, right? We can never have, it's so important to not view the market and say, okay, well, here's an external event why this thing is going to happen. The better we can read this thing called the chart itself, and that's why a lot of people say, John, how do you just have black bars on your screen? Like, this is telling me nothing. See, a lot of traders think that they need to have the moving averages on there, which, by the way, moving averages do give you a bit of gauge on trend analysis, which is good. If it's above it, it's bullish. It's below, it's bearish. Basic stuff. Stochastics, right? Stochastics, RSI, overbought, oversold, etc., etc. But there's also a lot of things that the market starts to give us at turning points in the markets, right? And people are people don't see these things coming until it's too late. So I'll give you an example. In the market itself, the market gives us trend analysis. So we have, in an uptrend, we have a higher highs and higher lows. Again, in the trend analysis section and in the free trading course, I teach you a lot more about that. There's like 2 or 3 videos there I'll talk to you about that. But the thing is that as long as the market keeps making higher highs like this, the market's likely to continue up. But hang on a minute. What happens if the market breaks a low through here? What does that mean? A possible trend change. So if we just look at that one simple but powerful technique in the markets, we can see the market's making high low, and then we rally it up a little high low, and then we rally up a little high low, and look what happened here. Bam. See how that low was broken? Are we making higher lows at this point here? Yes or no? A big right? That's the truck driver, right? That's the truck driver. Self-driven truck driver in 2021, right? The way things are going. So self-driven truck driver. Or maybe it's my daughter saying, Dad, give me money. And I'm like, no. My daughter is like, Dad, give me push-ups. $1 a push-up. Yeah, try to get him into shape. Anyway, get off that donut. So we can see, right, we have these higher lows all the way up, and then the market breaks down. So when the market breaks down, and we can see what's going on here, we can see how the market's no longer trending in that direction. But the same for the flip side same for the flip side. If the market starts to stair step down, which we did here, see this nice little lower high, breaking down, nice little lower high. See how it's making lower highs? Some of the sellers are in control here. But hang on a minute, what happens if we come down and suddenly we make a higher low? And especially if we're breaking past these previous highs. Well, hang on a minute, in a downward trend, right, we're stepping down, ding, ding, ding. It's like the bouncing ball, and it's like, you know, like the ball, boom, 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 down on the stairs. But if suddenly some reason we get a uptrend scenario, which is higher lows breaking past previous highs, just like we did here, a little higher low, breaking past previous highs. Who's coming in control right here? Say it with me, the buyers. And then suddenly we rally up, we make a higher low, rally up, we make a higher low, bit of a double bottom. We didn't break the low, did we? Rally up, we make a higher low, rally up, we make a higher low, rally up. Oh, look at this here. So what happens? What would it mean if we start to continue going sideways here for a little bit and then we start to break these lows through here? And then we start to get something like that. What does that say it with me, ladies and gentlemen? It's a potential trend change warning. Just like we did over here when we started to break the lows. Just like we did here when we started to break back up again. And we have not made a low yet, or we have made a higher low, higher low, higher low, equal low, higher low, higher low. This is still an equal low, so we haven't broke it yet. So that's the warning sign that we continue to wait for in these markets. So as you can see, and in that free trading course I'm giving away, you'll see a lot more of this. But yeah, probably say, oh, John's a head and shoulder formation, blah, blah. It doesn't matter about the head and shoulder formation. What's most important is what? See how the lows are giving us gauges, a guide of, okay, are the buyers in control? Are the sellers in control? What's going on here? And it's up to us to then start to follow along with what the market is doing. You know, with my private clients, I talk with my private clients all the time about this one thing, which is follow along what the market is telling you, not what you want it to tell you. Because it's always giving us a bit of a gauge, good sign, right? Like we're in a trade right now, and it's actually a bearish trade we're in. We're actually in a stock. I'm not gonna tell you what stock it is, but we're actually in a trade right now, and it's a bearish trade, and it's gone really well. It's a phenomenal trade. But if you looked at the fundamental of that, when we got into a bearish trade, there was a JP Morgan released it. It should be worth. They have a target $10 up on this particular stock. So the particular stock is, say, keep the number simple, say it's $20. We actually had a bearish setup, and they said, oh, this should be worth $30 on the day we got in, and guess what happened? The whole thing got dumped. So the whole thing is like listening to the market. The market's always giving us some gauges, some guide, and so on and so forth. And that's the same for the SP 500. Same scenario, we're getting a little rundown, a little pop back up. Are we about to get something like this back here where we have not exactly like this, but a little rally up and then a breaking of the low? We had a low here. That's making a higher low here now. Are we about to get something like this? And if we do, we're probably likely to head back down to at least the 3,000 level on there. And the Nasdaq is the big one. The Nasdaq is the big one. And I would say that if we do start to roll over, we're probably heading down towards the 10,000, possibly even down towards the 9,500 target. We're getting the same formation. And one thing that I really want to add here is, remember, the market is always giving us what I call the strength in moves. Now, this is a bit more of an advanced technique for you guys. But if you see look at this here. We have a strong buying leg, pretty much all through there. Had a little pullback, strong buying leg, little pullback, strong buying leg, little pullback, strong buying leg. So as you can see, we've had these strong buying. Look at this here, little pullback, bam. Little pullback, bam. Little pullback, bam. Sideways movement, bam. Notice this leg here, what I call the strength. Notice the strength of this downward leg here is so much stronger than this one here, this one here, this one here, this one here. And noticing what's happening now. Remember before we used to get what? We used to get that, didn't we? What are we getting now? Notice this leg here looks a lot more like the selling legs in the past. So this selling leg is stronger than before in this upward leg. And now we're getting this buying leg, which is much weaker in this here. So what are we getting? We went from strong buyers, which is this upward move, and weak sellers, which makes basically cause an upward trend, to what are we getting right now? And I'm not saying this is definitely going to change the trend, but it's giving us a warning sign in the markets. What is this giving us right now? This is saying that, hang on a minute, we went from strong buyers to weak sellers to now we're getting what? We're getting now a strong selling period and a weak buying period. So if you looked at these last two legs, out of the buyers and sellers, which one's more dominant? The sellers, right? Big, strong selling leg, very weak buying leg thus far. Now, we could do this here and continue up from here. Anything can happen, but it's more of a warning sign, isn't it? It's more of a warning sign of what's going on. Moving on to silver and gold now. Gold and silver are continue to be continue to not really do much around this level. And I do believe this is the calming before the storm effect. So keep an eye out for this. Hey traders, John Howell here. Thanks for watching my video. For a limited time only, I am giving away free access to my brand new trading course. I've put all my most powerful systems, strategies, and trading techniques that I've learned over the last 15 years and put it in this course, and I'm giving it away for free for a limited time. See, in this brand new Go to the Markets by the Board trading course, and you can get it when you go to johnsfreegift.com, you're going to learn, firstly, you're going to get access to a brand new training that goes for 90 minutes, and you're going to learn all the details step by step to my #1 trading system with over a 90% success rate that works on any market and any time frame. You're also going to learn 3 powerful chart reading and trading techniques. You're also going to learn 2 more powerful trading systems, and also you're going to learn 7-figure trading secrets, mindset techniques, and so much more. There's top 13 mistakes you're going to learn, the 10K per month formula, and so much more. No, this is not a get rich quick scheme, but if you are struggling with your trading right now and you need help, then for a limited time, you can get free access to this. So go to johnsfreegift.com right now, or click on the very first thing in the description, because for a limited time, I'm giving away. So go to johnsfreegift.com right now and start getting access to this full complete trading course, plus also the free training with my #1 trading system with over 90% success rate. Go do that right now, and I'll see you on the next page.